graph. Let's discuss this with Kaustubh Pawaskar of Sharekhan. Joins us right now on the show. Kaustubh, thanks much for joining in. What did you make of the commentary thus far? Because the market seems to be, kind of not quite settled in. Dabur disappointed, HUL a mixed bag here and there. Some of the smaller companies thus far, you don't quite know if they're confident or if they're hopeful.
I think quarter one, I think volume growth of mid-single digit was largely anticipated because most of the companies during their quarter four result in their commentary has mentioned that they've started seeing a slowdown in the rural market, and that was supposed to be continued in Q1. So Q1 mid-single digit kind of a volume growth was more or less anticipated. However, Dabur surprised us positively by posting 9.5% volume growth. But in the commentary they mentioned that the fag end of the quarter, June, the industry growth was somewhere about 6-7% and volume growth further moderated to 4%. So that is something which is kind of a worrying, because Q2 according to us will be another subdued quarter, and volume growth would be about 4 to 5% for most of the companies. That is what our understanding is.
Okay, Kaustubh, just to get in a sense from you, while obviously, these numbers are nowhere compared to the volume growth numbers that we'd seen in the previous years, but do you think things are normalizing now? Because for most of them, even Colgate for that matter, came in line in terms of the volume growth. The others as well that reported numbers. HUL was a miss by 1%. You think that there's some sense of normalization that's coming back into most of these consumption names?
See, I think the basic consumption items, I think I don't think there is any downtrading or there is a cut on the consumption. So I think those categories would continue to do well. The only issue is with the premium categories where we have seen some downtrading or there is a cut on pack sizes. So there might be some slowdown in those categories. For example, in HUL results we have seen home care performing well with double-digit volume-led growth, while the personal care, the growth was muted at about just 4%, where personal wash didn't do well during the quarter. However, companies have taken actions. We have seen HUL reducing the prices by about 4 to 6% in their some of their popular soap brands. Even its competitor has taken the pricing action. So I believe the benefits of lower raw material prices have already been passed on to the consumers, and I think we should see sales volume of the soaps category or some of the key categories to be stable going ahead. But Q2, I think the growth would be more or less moderated if monsoons are good, if government provides some pushbacks. I think that would result in better performance in the second half of the year.
July, though, we're still a bit deficient with regards to the monsoon, so I don't know how that will play up in the upcoming months. But, we've got Jubilant Foodworks that's due to report its numbers too, Kaustubh, and same-store sales growth, that's something that's going to remain in focus. Last quarter had about 6% expectations, or somewhere closer to that itself, but nowhere close to what we've been seeing in the previous quarters to the tune of 20%. That's going to take some time to follow through. But what would you be expecting out of Jubilant, and what would be a good enough number for you?
I think 5 to 6% same-store sales growth is quite decent, because we have to consider the high base also. And the second key point is that Jubilant have started, adding stores in the vicinity of some of its mature stores. So there would be some calibration of sales happening, in the mature stores. So I guess that impact would be there, for some quarters. So I think 5 to 6% same-store sales growth is quite, decent. From the margins perspective, I believe that we should not expect any significant jump in the margins, mainly because of the fact that the company has recently got into the Chinese cuisine segment, and I think they would be doing a lot of investment which might eat up margins for some quarters. So margins would be flat, or there might be 40-50 bips improvement. But in terms of same-store sales growth, if 5 to 6% same-store sales growth comes in quarter one with about close to double-digit revenue growth, I think that would be a decent quarter for Jubilant.
Just, one question with regards to the management commentary so far. Obviously, we've heard much of it in the last quarter itself with regards to the slowdown. So there's nothing new that they've spoken about in terms of this quarter and what the outlook for the future holds. But do you believe that there could be a meaningful turnaround anytime soon? And by when do you envisage that happening?
See, as I said, that monsoon is going to be key. As of now, only 50% of India has received monsoon, and most of the other, the other part of the India is yet to receive monsoon. In fact, it is deficient out over there. So July has almost been, it's in verge of over. So if August, September, if we see, somewhat normal monsoon, I think that would be breather for the rural economy. Also, government. They need to take some actions. They have already taken some actions, but I think those actions need to play for the rural economy to see improvement in the rural demand. So I think, if all those things are in place, I think quarter 3 should be one of the key quarters for the consumer good companies, because even festive season would be around the corner. So we normally see, consumption increasing during the festive season. So I think Q3 would be one of the important quarters for consumer good and consumer discretionary companies.
That's right, Kaustup. In fact, the management of HUL clearly highlighted as well that they do expect a revival in the demand environment in the second half of this fiscal year. Having said that, Kaustup, have you observed any sort of similarity so far with the numbers which have come out with regard to ad expenses for Dabur, HUL? Both of them, ad expenses have been on the lower side. And of course, looking at the ad revenues of Zee as well, we've seen the ad revenues not picking up because the companies are not spending too much. And they've highlighted as well the spends from the FMCG companies were on the lower side. Do you see this trend continuing? Because in an environment where demand is weak, at least these companies are trying to protect their margins by cutting down on cost.
See, what we are getting from the company is like when there is a weak demand environment, normally the competitive intensity is low, and there is not much requirement to go for higher advertisement spends. So normally in weaker demand environment, the small brands, regional players, they are not active much to go into the market with best offers or higher sales promotion activities. So I think that is the case where large companies like HUL, Dabur, they have their that benefit of not to increase their advertisement spends, but do it in a judicious manner. However, the promotional offerings are still there in the market. We have seen that, but going ahead, we believe that advertisement spends would remain flat, or there would be marginal increase on YY basis. But if we see demand environment improving, I think the advertisement spends would also go up.
Okay, Kaustup, before we let you go, and thank you, what are your top picks in the FMCG space?
See, we like Hindustan Unilever mainly because of the fact that it is a large FMCG player, and it will benefit from recovery in the demand, especially in the rural markets. Already it has a strong product portfolio, and with GSK's acquisition. I think its its food business will do well. It will have a strong product portfolio in its food business. So I think HUL is one of our topics. We like ITC as well, mainly on account of its discounted valuations, and we have seen that for last few quarters we have not seen any increase in the tax on the cigarettes. So I think that augurs well for ITC's cigarette business sales volume. So I think ITC is another stock, and we also like Marico mainly because of the fact that this year Marico's earnings would grow with margin expansion as copra prices are lower on YY basis. So that benefits are there, and with copra prices down, I think most of its benefits would be passed on to the consumers, with some pricing actions been taken in Parachute and other key brands. So I think though we might see revenue growth maybe in high single to low double digit, but I think margin expansion would help Marico to achieve double digit kind of earning growth.
All right, Kaustav, we leave it at that. Thanks very much for joining us. Appreciate you taking out the time.